Welcome to a video that I like to call the deep dive video. This video is designed to go through charts that I don't necessarily cover in the daily videos. I like to only share daily updates that are actually telling us something or giving us some kind of extreme negative or positive reading. That helps to prevent the videos from becoming too long. Well, that leaves a lot of charts that we may not consult during the week. So this video is designed just to look at those other charts to see what insight they may be giving to us. This is being prepared for Monday, February 27th. The first chart is a chart of the VIX on the top and the RSI 9 period on the bottom. What we look for are extreme positive or negative readings. Right now, we're not getting any, so that's why I haven't included that in the videos. Another thing that's interesting to look at is how far are we from the all-time high. Currently, we're down 17.61%, and this red line over on the right-hand side marks the close from Friday's session. Another area that's kind of interesting is support and resistance. Things will come in and out of favor as market conditions change. This is an Ichimoku cloud, which are nothing but moving averages set forward to provide some area of support or resistance. We had pretty good support coming in right at the end of 2022. We bounced up off of that. We're coming back down now. If we come down to this level, I'll start using this in the daily updates, and especially make note of that if we fall through that support level. And that's at anywhere from probably about the 3950 level to the 3900 level. Technical alerts are something that are produced every day. These are predefined technical alerts. They get kicked out by stockcharts.com, and then a whole list appears at the end of the day. This is just a list for Friday, February 24th. We start at the bottom and then work our way up, where the S&P crossed below 4,000, then the NASDAQ went below 11.5, the Dow went below 33,000, the NASDAQ went below 11.4. We had the S&P BPI cross below 50, and I did talk about that in the video. And then some other sectors, consumer staples crossed below 50 with a BPI, and discretionary also crossed below 50. At the very top, we see where the dollar has gone back above 105, and that's probably providing some headwinds to stocks. So we just look at these just to say, oh, that happened. I didn't realize that happened, especially with other indexes or sectors. This TSX right here, that's Canada. Another thing that's interesting is how are the different indexes that we follow, there are 5 of them, how are they scoring in what we call a scooter rank? It's a scale of 0 to 100. The closer to 100, the better the technical score is for that particular chart. When we take all 5 of the indexes that we follow, the Dow, the NASDAQ 100, the S&P 500, small caps and mid caps, we rank them. And coming in first place this week are the mid caps at 84.9. Then in second place are the small caps at 79.8. Third place are the diamonds at 49.9. Fifth place is the S&P 500 at 37. And in last place is the ETF on the NASDAQ 100 called the QQQ coming in at 26.4. Some short-term charts. This is a daily chart, and I pretty much show the 1-year version of this chart in every video. This is a 2-year version, and the reason I have a 2-year look is we can go back and see where different support and resistance levels, where they came from with these black lines on the chart. We can also try to spot out other levels of support or resistance. Another thing that we look at is the short-term rainbow. This is 10-period moving averages all the way up to 50 in different colors, so it looks kind of cool. When we're going higher with the S&P, this rainbow tends to go up and vice versa. Well, we had been going up nicely, but now we're starting to come back down and slice through the rainbow. We actually closed underneath it, so that is turning more negative. Another indicator that kind of comes in and out of the daily videos is called the Arun. This attempts to measure the buyers and the sellers. When the green line is on top, that means that buyers are in control. When the red line is on top, that means that sellers are in control. And then this line down below is just an oscillator between the two. When we're above 0, that's positive. Well, lately, over the last number of days, we've been going pretty much sideways with the oscillator, but we're still positive overall. Here is a 20-period moving average study, both the simple and the exponential moving average. This was the first moving average that we broke down below, and that's considered to be pretty good short-term support or resistance. But since we're way far away from that now, I don't include it in the video. Here's another short-term measurement called the force index where we drop below zero. We were extreme negative at one point where we hit the lower end of this Keltner band, but we bounced back up and came back down, and we're just more decidedly negative. Some intermediate term charts. This is standard deviation. How far is the current price getting away from the standard or average price? And we're just about at the midpoint now. We have a moving average going across here. When we're below this, that means the stock is not moving very much, or the index is not moving very much. When we get above this, that means everything is tending to go pretty crazy. Well, since we're right about on the moving average, it's not showing anything really extreme. The mass index is not giving us a signal right now. When we pay attention to this is when this black line goes up, it crosses above the red dash line and then above the blue line. When it comes back down and then crosses the red line again, that is a signal. And whatever stocks are doing at that point, we're looking for a reversal of trend. This next chart shows a Connors RSI, which is very similar to the RSI, showing extreme positive or negative readings. We almost came down to an extreme negative reading after bouncing. We're below this dashed line, so we are more negative. Here's a longer term rainbow from 50 periods all the way up to 100 periods. Where we slice through some of the shorter term moving averages, we're coming into the top of this rainbow, and we're going to see, will any of these moving averages act as support? The vortex also had a change a few days ago where the red line is going above the green line. That is more negative. Ease of movement, just going back one day. Don't really pay attention to that one too much. Going back 14 periods, we drop below the zero line and we are negative. Money flow index is another oscillator that we use. When we're below 50, that's negative. Well, we are below 50 and declining, even though we ticked up slightly after Friday's session. The Sean trend meter, after giving us an extreme positive reading, has been dropping down. You might even say this is a head and shoulders top right here. We'll have to see if that means anything or not. But as the S&P has been going down, this indicator's been going down also. We also have a moving average study based on 20, 50, and 200 periods. We're going down with the 20 period and the 50 period and the 200 right now, and we're not giving any kind of an extreme negative reading, at least yet. The boom indicator, this measures how far away is price from the 50 period moving average, that's this top line, and then on the bottom line, how far is price away from the 200-day moving average. When we drop down below zero, that's kind of significant because now we're turning more negative and price is going under the moving average, and we're also dropping below zero with the 200 period study. The RSI 14 and 9 were below 50 and declining with both of these indicators and not extreme currently. The percent B is used with the Bollinger Bands. When we exceed the upper Bollinger Band, we get an extreme positive reading. When we exceed a lower Bollinger Band, we get an extreme negative reading. We can use this more for direction. When we're below the dashed line and declining, that is negative and not extreme at this time. The parabolic SAR, and this was the signal that first warned me a couple of weeks back that maybe we're heading into trouble. We were going up pretty nicely. During that time, we had a little bit of gyration in price, and then boom, all of a sudden, there was one dot above. And that ended up being the beginning of what we were seeing as this decline. Now, will this always tell us that? No, but it was very good this past time. And as long as the dots are on top, that is a negative signal. The Kopit curve generated a signal in early 2023, but then we crossed back below this moving average, and the Kopit curve itself is starting to decline, so that's more negative. This simply measures how far away are we from the 200-day simple moving average. When we're green and above this line, we're above it. If we drop down below it, we will be negative. And a lot of folks use that as a line in the sand to determine between positive and negative trends. The ultimate oscillator going down below 50 and declining, so that is negative. This is a Keltner band measuring 1, 2, and 3 standard deviations above and below current price. A lot of times with the different option strategies, I'll use these bands to determine what strike price do I want to implement a particular strategy. This is just showing how we're going down overall, and that's why the Keltner bands are declining as well. This chart shows a double exponential moving average and a triple exponential moving average based on 50 periods. That's the blue and the red line here, and they were both rolling over. Another moving average that we have here is an anchored moving average going back to the COVID low. That could be support below current price if we continue to fall. This blue line is the anchored moving average going back to the all-time high, and we had hit that a couple of times. It looked like we were going to break through it, but then we came back down, and what had been resistance now had become support, but now price has fallen below that moving average as well. The PMO goes in and out of the videos. We are declining overall with the PMO, and even a couple of days before that, we saw a crossover negative with price and volume. All of our oscillators continue to be negative and are going down. Looking at a 50-period moving average study, takes the simple and exponential moving average. It looked like the exponential moving average may be providing some kind of support. Well, that didn't really hold. The one that investors use the most is the red line. That's a simple moving average. We fell back down below that, but we're not very far away from it. If we get a bounce, we'll try to recapture that moving average. Will that act as resistance if we try to go back up? And currently that's at the 3980 level. Here's a 100-period moving average, which also had been providing some support, but we broke down through that. This is a moving average going back 20 periods of the open, high, low, close. Sometimes when we're going up and fall back, it'll act as support. Sometimes when we're going down and we rebound, that'll act as resistance. Well, we're clear of all of these different areas right now. The KEGI chart that we look at has turned negative with the red line, and it is declining. And the Renko has a red block, so that is now negative. Some long-term charts. Here's a 50 period up through 250 periods with a rainbow. We're kind of coming back into this rainbow right now and seeing if any of these other levels will act as support. The Special K is a very long-term oscillator. It looked like we were getting ready to cross above this red line. That would go from negative to positive, but we just came up close to it, and now we're rolling back over. Here's a long-term moving average study. I was showing this in pretty much every video a couple of weeks ago because we were extreme positive with the 150 and the 200. Well, since that time, we have dropped below this. On the top, I just keep a 50-period moving average there just as kind of a reference. Looking at the Vixen, which is the VIX for the NASDAQ 100, as we've been going back up, we're seeing a little bit of increase in volatility, but not anything all that staggering. This chart isn't as useful as you'd like it to be because of all this erroneous data in here. It looks like icicles hanging off a roof. Some rate of change charts going back 250 periods after hitting a low. We have been bouncing back up. Can we keep going up? And here's an even longer term chart going back to 1980 where we are trying to bounce back up and recover. Some of our scenarios, a thing that I used to use almost every day in the videos was the equity put call ratio. But something has changed with that, and it's not updating in a very timely manner, and I get ready to record the video, and this chart is still not updated, so I had to drop using it. But I still look at it after it does update, and I include it here, where the number of puts that people are buying in relation to calls has really been going up as the market's been going down. And then this is a 5-day simple moving average of the equity put call ratio. It also has been going up. And where we find this useful is when we get above this 0.8 level and really spike up, a lot of times that will mark some kind of significant top or bottom in the S&P 500. Usually it means a bottom because the people are buying more puts. And then when we start to come back down, a lot of times that will provide some support to the S&P. Well, we had a huge spike up here, and we've been coming back down, and we saw a nice bounce after the beginning of the year, but not a lot of follow-through, or not of the magnitude that you would necessarily expect with this high of a spike. Then going back 253 periods, that's the number of trading days in a year, the equity put call ratio is continuing to go up. For a while, it was looking like it might roll over. Well, now it's ticking back higher. When the VIX starts to really act strange, I look at this chart. This is a correlation chart between the VIX and the S&P 500. When this spikes up and starts to come back down, we're looking to see, will that have some kind of an impact on price in the S&P? We were going up higher, and I started making mention of this, but then we've been coming down lately. Another thing that I have been showing off and on is a 50-period exponential moving average of the highs minus the lows. This has been going higher overall. We're above this zero line, but it's starting to roll over. On the next chart is the same indicator, that's the black line, and we're dropping below zero with that. So that's turning more negative, and the red line here is the same as the moving average on the previous chart. This chart tries to measure fear against complacency. When this is really spiking up, that means there's a lot more fear. When it's going down, that means there's decreasing fear. We're really not getting any useful readings from this over the last year or so. I still look at it every day, but it really hasn't been all that insightful. Thank you. I hope you found this useful. Please feel free to check out the daily video, weekly video, intermarket analysis video, and I will be preparing the supplemental video where I go through the isabelnet.com charts to see if that can give us any useful insight. So I will talk to you in the next video.